This is the Aussie dollar 15-minute time frame, and this is a high and tight flag I'm using as an entry into a potential breakout of a bigger head and shoulders. I'm going to bring over a chart very shortly so we can do our higher time frame analysis, but this is what I was looking at here. So we had this nice rally and then we've been consolidating sideways, and I actually waited and waited for this because I wasn't too sure if initially it was going to be a rising channel or if it was going to be something different. And now that we've actually come down and retested these lows multiple times, I've got long. Now it's a very small amount of risk here, currently risking now only 8 pips. And up here you can see that we have a 127 extension, which is where I would usually look at taking targets for this type of pattern. However, if I just zoom out, you can actually see here we have a head and shoulders. So I'm just going to highlight these. So here is the left shoulder, here is the head, here is the right shoulder. Now one thing that we don't have is up here, we do not have an initial structure high, so this level has been adhered to very, very nicely. So what I'm looking at doing here is using the pattern to break out and hopefully put in an initial structure high and carry on up to complete this AB equals CD pattern, which is up here, just a little bit higher than that as well. We do have quite a lot of fib confluence. So we've got to break through this major level of structure and also the 7100 flat. So why am I looking at taking a risk on this trade? Well, I can be more aggressive with trades when the risk is very low, and so the risk here is only 8 pips. Second of all, these high and tight flags are not just excellent for breakout patterns, they also offer very, very nice areas to act as either resistance or support. And look at what has gone on here. 4 times this level has acted as resistance, and if we break out, hit that 127 and pull back, this will give me an area that's been resistance 4 times and will now be support that's been tested 4 times, and should give me a very nice place, a nice position to be in to hold for the breakout to the upside. The other thing that I'm looking at as well is, if I just go to the 60-minute time frame, is that we have not actually broken below the shoulders. So look at this here. If I highlight this entire area here, we have not broken below it. 4 times it's been tested, and here we have not broken below it. If I just zoom in, we actually put in a doji right here, and then we did trade within that doji wick, and then we've gone higher. So this obviously would be a little better if we did have this initial structure high here. In fact, it would be a lot better. So but again, I can be more aggressive here with this type of head and shoulders. So it means that I'm risking 8 pips for 46 here. I'm playing a few pips below that AB equals CD pattern, though I do think price can get even higher up to this level, which is this structure level up here. So very nice trading opportunity, a lot of confluence, not quite as much as I would like, but I'm still quite happy to take 8 pips of risk here for potentially 46. And we're back for an update on this trade. We're currently on the 15-minute time frame, and as you can see, we're 24 pips up, and we have got the breakout. And I absolutely love it when this happens, because it's played out exactly as I said in the previous part of this video. So I said to you that we could see the breakout to the 127, and if we do see a pullback, if we see a rejection off that 7100 even handled number and come back into this highlighted area, which was the high and tight flag that's been tested 4 times and could offer a very good place to act as support, since it was very good resistance, that we could see this as being the breakout. And if I just zoom out here and actually look now, you can actually see now that we've broken above this level, and we've broken above this entire level, and we've actually closed above it here on the 15-minute time frame. Now there's 4 minutes to go until 2 o'clock. That means 4 minutes until the hourly candle, and if things stay as they are, then we will have a nice close on the hourly as well, giving us a giving us a break above, close above this actual level. Now I have made one slight alteration, and I'm just going to go to the 60 minutes and show you, and it's simply to do with the targets. I see no reason here why I shouldn't be playing for the full extension rather than just the AB equals CD pattern. So here is the 60. You can now see that we've broken above. We've got 3 minutes to go, and hopefully we'll get that break above, close above. I've got no way to move my stoppers yet, so we could see a pullback here into the structure level, and then we could see a continuation on up. I was looking for targets of the completion of this AB equals CD pattern, but if I put a structure level on here, I did mention this as well in the first part of the video, just up here, we do have that 141 and 1618 Fibonacci ratios up there, so at this stage there's just no reason why I can't go for that extension. So I am playing a few pips before it, to be honest. I am playing a few pips below the structure level, and that 14 and 1618 extension does mean now that targets are more than the 46 pips, I think it was. We're looking at 52 pips now. So fingers crossed, we're going to get up there, and this will be a beautiful trade if it comes off. I must say that this exact trade I traded about 2 months ago, the exact one, obviously in a different currency pair, different time frame. I used a flag pattern as the breakout, very similar setup to this, lots of confluence, played it for the breakout, and that offered a 4 or 5 to 1 this risk to reward. This one now is going to be a just over a 5 to 1 risk to reward. So lovely trading opportunity. We'll come back and hopefully see this thing rally towards targets. And we're back for the last update on this trade, and as you can see now, I have been stopped out for -8 pips. What I want to do though is just talk you through this trade, because it's not over, although I have been stopped out. And we got the reaction we wanted, we got the breakout. We actually went 30 pips up for my 8 pips of risk. The market came down, and if I just put a structure level on here, you can actually see that we have not closed below this level. We put in this big doji here, followed by a higher high, higher close, and the trade is still perfectly valid for a trend continuation to the upside. If I just go to the 240 time frame, and you can see what we've done, we've put in a beautiful doji here, and it looks as though we're working our way up, though obviously that candle hasn't finished. So my bias here is still long. If I just bring back on some orders, I have re-entered. So I have re-entered based on the 60 higher high, higher close, holding that structure level, the 240 doji, and I've gone ahead here now and stops just below the doji here. So this time 23 pips of risk for 51. I would have still preferred to have been in the trade for my 8 pips if I'm honest, but one of those things. We got the breakout, we just never got the follow through. Very, very good trading opportunity, I think, for that 8 pips. And we'll come back and see if there's if this time we can get up there and get those profits. And we're back for the last update on this trade, and as you can see now, the breakout has occurred. A couple of things on this trade. First of all, I was stopped out. I only had my stop, I think it was just a couple of pips below the rejection candle here, and I'll talk about that in a moment. And the other thing is as well, I did actually change my targets once I'd completed the video, because when I re-looked at the fibs up here in the structure level, I actually changed my targets to where we're actually trading at right now. So it was actually for 59 pips, and you can see that we've just actually hit that level now. So this trade technically went on to win for the 59 pips, but I was stopped out for the loss of 21 in the end. Yeah, I was re-looking at this now. I went 2 pips below the low because of the rejection candle here. We did actually come lower, and we did actually close below that candle. So when I look left at where there was a structure level as to why the market came down there, there isn't really anything. usually I make sure that we're underneath the left shoulder. That wasn't possible in this case because it was down here and we had the signal up here. And so if I had to take the trade again, I wouldn't work it any differently. You know, I've had a couple of shots at this. I had the one for 8 pips and we got 30 up and we came back down. We put in this rejection candle on the 4 hourly. My stop was just a couple of pips below it. Then here we had a break below, close below. If I had my stop 8 pips below it, I would have still been in the trade. But yeah, one of those trades, unfortunately. I mean, it's great to see it go on and win. I did have a trade yesterday on the euro yen, which stopped me out by half a pip, and then went on to win. And you know, I create these videos so that I can analyze them. So that I can analyse those types of trades and see, did I do anything wrong? Was there something I could have done better? And yeah, hindsight is a great thing, of course. In hindsight, you can always do it better now that you see the outcome. But when you're trading live, there was no structure level, there was no even handled number. I was simply putting my stop behind the doji candle. It's one I'll keep an eye on because yeah, my stop being further back would have allowed it to win, but I wouldn't have done it differently. So there we go. If you haven't subscribed, do me a favor, subscribe. And of course, if you like the video, even though technically I didn't win but the trade did, go ahead and give it a like as well.